of the day, thought we'd have a look at Macquarie after this morning announced 24 interim dividend, $2.55. Company record revenue from ordinary activity 7.9 bill and profit of 1.7 bill, down 39%. Layoffs at Macquarie as well. Macquarie's already trimmed its earnings forecast twice since May. Very un-Macquarie-like. Everyone thought that was a one-off back in May, not anymore. They go, because corporate deal making is down, less volatility in commodity prices than a year ago. So of all the banks, Macquarie has consistently been the darling of the market. Is it losing its shine? Jun Bei.
I think it absolutely has been. We've seen the share price underperform a fair bit into this result, expecting a weaker result. Now, the Macquarie is a well-held stock. Most of the institutions will have Macquarie in their portfolios. It's a great long-term growth story, invest across all these infrastructure, renewable energies and things. So it's a great place to be. But the challenge is they've made such strong earnings for so many years, and to cycle those strong earnings is going to be difficult. Remember, for the last couple of years, we'll keep saying that's peak earning, and they keep doing better. Now, this year is going to be one of those years that they have to rebase the earning lower. And now, so far, we've seen this result. Everything looks pretty poor. It's down closer to 40%, missed consensus by 20%. So it is pretty poor. It's going to be second half loaded, so there's a bit of chance for them to make up. Energy business will make up a bit of it for it to come back, but that is not part of the earning where you should give a high multiple for. So I do think there is still a bit more earnings risk into the second half. I think there's possibility for company to downgrade again for the full year earning because they need to make 70% in the second half. So to me, it's more of a neutral at this stage. It's just the earning needs to rebase this year. It's one of those, what do you call a rebase year or transition year?
Okay.
Yeah.
So the best is behind it.
It just needs everyone to expect a little bit less from here on. For the long term, it's still there, but it just for the time being, it's going to be next 12 months. It's going to be a bit tough.
Okay. So do you hold?
It's a hold for me, yeah.
Or do you average down, or
so
is this a good buying level for Macquarie?
Look, I think the level looks pretty good, but relative to, I always like to look at the relative opportunity. Do I put in BHP? Do I put in this? Where do I put it? So this certainly looks better than the domestic bank at this point because it is cheap. It is actually cheaper than some of the domestic bank now, and it's got the long-term growth, structural growth. Just knowing share price may not go rally away with the market just because there might be a little bit more earnings downside. You'll be buying at this thing, but I'm more of a hold because I just know there's more earnings downgrades.
So and there are better growth opportunities in the short term.
Absolutely.
Than this, so you've got plenty of time.
Look across the market. You want to buy growth. There's even your likes of CSL and other things. So there's lots of opportunities.
So you're buying CSL.
Yeah.
Right.
She's been buying CSL for a while now too. So
I keep asking for a friend who has been overweight, now not as overweight, in their super fund with CSL, thinking.
Oh, so you got at the IPO then, did you?
I did actually, but years ago. So I'm that old.
30 years.
That's not bad. Back to Macquarie.
Look, so obviously a softer environment for a lot of things. Deal flow is definitely softer, as well as then basically costs are continuing to rise. And I don't think the costs have been captured correctly this half. So Jun Bei's right, there's potentially some more downgrades just on costs going higher.
And more retrenchments?
There's been some horrible stories. Maybe we'll talk off camera on that. But it's
been Macquarie?
Horrible. It's been really bad for a lot of people. So yes, I suspect they're going to still have to cut more staff to keep those costs down.
Right.
But broadly, I think the stock is a fantastic business, really, really comfortable with it. I'm a hold as well. I just want to see how things are starting to go. I'm always of the view anything under $180 is a buy. We're certainly in that territory at the moment.
Yeah.
So look, brave people absolutely start averaging in or picking up some more. The price action just today was a really good realisation of how strong this stock is. The stock fell on the open, but as I was leaving the desk, it was basically back to evens and in fact starting to go higher. So any kind of weakness, you'll see buying coming into this stock pretty quickly.
Now, would that be friends of Macquarie coming in and supporting?
Well, I mean, there's a lot of friends.
Stock, so
there's a lot of friends out there.
Are they not too embarrassed?
Yeah, potentially. Okay. But we've known that there's this negative view on Macquarie for a while, and they came out a couple of months ago and said, look, this is going to be a little bit tougher. Environment isn't looking that good. and they're starting to realise that at the moment.
Okay.